right, well, good morning and good afternoon. Welcome to the August 12th WASDE webinar. Hope everything is green where you are and growing well. Glad you could join us today. My name is Greg Horstmeyer. I'm the editor-in-chief at DTN, and I'll be your moderator today. I've got to say this is August the 12th, and so before I go too much further, I got to give a shout out to the woman that put me on this planet. Happy birthday, Mom. Today's my mom's birthday. So it's a special day in another way as well, as the voice that you just heard, the laugh, with us today, Todd Hultman. Those of you who have been longtime participants in this webinar and follow DTN know Todd's name and know that voice. Todd is joining us here today to help with the WASDE analysis and give us some thoughts on that. Rhett Montgomery is on vacation this week, and actually this was a vacation that his family planned some time ago, even before Rhett came to work for us. And I just got to say, they're visiting the beaches of Normandy, where his grandfather was part of the D-Day invasion. So hope they have a memorable trip and a safe trip back to the States. We're looking forward to getting Rhett back. But we're glad to have Todd with us today. Appreciate his being willing to help us out and give us his thoughts, as I know he'll do a good job of. As always, this is a listen-only event. You can ask questions at any time. If you go down to that little circle, the little lasso, little comment balloon, and click on the chat, open up the chat box there, and you can type in questions as they come up. And I encourage you to type them in as they do come up, because it helps me figure out how to order the questions, maybe according to some of the things that are going on that Todd shares with us. So be sure and do that. This session is also being recorded, and it will be available for rebroadcast in about 2 business days at the dtn.com website, which is where you went to sign up for today's event. With that, I think we're ready to start. Todd, welcome. You came in for a record day, it looks like. We're talking about record corn yields. What do you think?
Yeah, well, my hair is standing straight up if you could see me, Greg. I did not expect this big of a corn crop estimate. I don't know if folks have heard by now, but you might want to be sitting down. We are in for a big corn crop according to USDA. I can't say I'm as confident about their number as they are at this point, but we have a lot to talk about. So let's go ahead and jump to that first slide, which shows the USDA U.S. corn estimates. And we've got the table here. And before we get to the big crop estimate, now you can see on the far right column, 16.74 billion bushels, which is a record by a big distance, and a yield of 188.8 bushels an acre. I'll come back to that in just a second, but let's start on the old crop side, which is the far left column. And there we see some modest adjustments. So USDA reduced the ethanol estimate by 30 million bushels in the old crop season. We just have about 20 days left here or less in the season. I was a little surprised by that, honestly, because the ethanol plant margins are extremely profitable right now with corn as cheap as it is. But USDA trimmed back the demand estimate for ethanol, 30 million bushels. On the other hand, they increased the corn export estimate by 70 million bushels. And if that comes true, and it is on track, I think that's a reasonable increase. That will be a record year for the corn exports. So we've had a very good export pace this year. And it looks like that's going to prove out to be a new record high. The ending stocks estimate for the old crop season, which ends at the end of this month, 1.305. That's down 35 million bushels from what USDA said a month ago. So we're starting with a slightly smaller ending stocks estimate on corn. But again, as we mentioned, we've got a record corn crop ahead. So let's go ahead and look at the far right column now, which are the new crop estimates for the new season that we're in. Now, the first thing I want to point out too are the acre estimates changed in this report, and that's something that doesn't always happen in August. But we see planted acres for corn actually increase from 95.2 to 97.3 million acres. So it's an even bigger planting than the big planting we thought we were dealing with in the first place. And I believe USDA includes FSA data in that. So they've got a little more records to work with that they're making that increase on. They also increased with that the harvested acres from 86.8 up to 88.7. So that's a 1.9 million acre increase in the harvested acres of corn. And of course, that adds to the big crop that's being anticipated here. Now, the yield estimate jumping up from 181 to 188.8 honestly makes me cringe. I wish they wouldn't go that high this early. Yes, in this month's report, the new piece of information is that we did get producer surveys from around the country, and I have to, expect that those producer surveys are expecting good crop conditions or reporting good crop conditions around the country, as we've seen in the high crop ratings, but also most of us has visually seen it with our own eyes in other part of the country that we're living in. So uh, I'm here in South Dakota. It's probably the greenest summer I've witnessed so far, but that's also true for eastern Nebraska, where I'm from. Just everything green and lush, and it's been fantastic conditions. And it's somewhat surprising and unusual this year that in the western corn belt, we're really having the good weather, and the crop ratings are higher than what we're seeing right now in the eastern corn belt. So you don't see that every year. As we go down the rest of the new crop changes, along with that big new 16.7 billion bushel crop, they're also going to increase some of the numbers on the demand side of the market, and they did. If you notice, the feed and residual account was increased by 250 million bushels. It's now 6.1 billion bushels. The ethanol estimate increased 100 million bushels up to 5.6 billion now. And of course, they're expecting cheaper corn is what's happening there, is how they're increasing the demand for that. And then lastly, we had a 200 million bushel jump in the export estimate for corn, now up to 2.875 billion bushels. So put it all together, the new ending stocks estimate for the new crop season, 2.117 billion bushels. That's the highest we've seen in 7 years, and it brings the expected cash corn price average down to $3.90. That's a 30-cent drop from last month's estimate. I have to say, long-term speaking, and given where we're at in relation to production costs, this should definitely be the toward the bottom end of the price swings. But obviously, first of all, I'd like to see if this big harvest that USDA is talking about really proves out when the combines hit the fields. I think we all expect a big crop and a big harvest, but honestly, I thought 184 or 185 would have been a more reasonable estimate today before we start getting field data next month. Let's take a look what they said about some of the states involved. On the left column here, we have the top 8 corn producers from a year ago, and I've got last year's yields versus today's estimates from USDA. So for Iowa, you can see they're estimating 221 a bushel, up from 211 a year ago. Illinois, they're looking for 222 a bushel. Minnesota looking for 202, Nebraska 192, just across the board, looking for better yields. Last year was somewhat favorable weather. Kansas and Missouri snuck in on the number 7 and 8 spot, and they're also expecting higher yields there as well. So just basically across the board, we're seeing some pretty big yield estimates. Here's the world estimates, and of course, if you look at the upper right corner, the ending stock estimate jumped up from 272 to 282.5 million metric tons. That is a big jump, and of course, the large proportion of that was explained by the increased crop estimate for the United States. So just can't get around it. 16.7 billion bushels is a lot of corn, and it's affects it internationally supplies, as well as here in the U.S. The only other significant change among the major producers, USDA increased the corn crop estimate for Ukraine from 30.5 to 32 million metric tons. For China, the large estimates were kept unchanged for the month, so no change there. And so I wanted to note that even though the production estimate, the world production estimate, went up by roughly 25 million metric tons in this report, and again, that was largely the US, the demand estimate went up by roughly 14, almost 15 million metric tons. So a little more than half of that was compensated by an expectation for increased demand. And obviously, that's they're expecting from cheaper corn prices. So very, very tough report to take. Obviously, we're already in a tough situation as far as the corn price goes, and today's report did not help that. Take a look at a perspective, the historical perspective going back to 2010. What do world corn supplies look like? And in these numbers, I exclude China because number one, I don't think they're reliable, but number two, they're not a major supplier of corn. They're actually a buyer of corn to the world. So as we look at the world ending corn supplies around the world, excluding China, USDA putting the estimate at 4.1 billion bushels, which is roughly where we were 2 years ago. So there is a bit of a jump from last year on that estimate, but we're still roughly where we were 2 years ago. Here's the export pace, and it's just been extraordinarily strong. On this chart, the green shaded area is a year ago export, actual export shipments. The red line is where we're at as of July 31st, and we've shipped 2.48 billion bushels of corn since the end of July. The black line is the 4-year average. So not only are we up 27% from a year ago, we're also up favorably from the 4-year average. So it's been a fantastic year. And as I said earlier, USDA estimating exports now at 2.82 billion bushels. That will be a record export total for the U.S. So that has been very good news, helpful on the demand side, but unfortunately not enough by itself to overcome this expectation of a big crop ahead. Similarly, ethanol margins have stayed attractive, and I thought the one thing that's interesting of this chart is it shows how well the processing value of corn has held up. Now, this is USDA's report and taken for the state of Iowa as one example, but basically the processing value of corn, that is the value of ethanol and corn oil and distiller grains that you get from a bushel of corn, comes out to roughly $6 a bushel, and it's been true that way all summer long, even though the cash price of corn shown on our DTN National Index has fallen from roughly 4.5 a bushel down to 365 lately. So even though the corn price keeps getting cheaper and cheaper, it's good news from the demand side, at least, that the outside market is very strong and the processing value is not collapsing the way the corn prices have. So the cheaper corn gets, the stronger the ethanol demand situation becomes, and that's like the exports have been one of the positives, but unfortunately we don't have enough positives. The basis of corn, not surprisingly, showed by the red line here, and I know sometimes this can be kind of a hard chart to read or understand, but I kind of wanted to show where we stand this year versus the past 10 years. And the red line is the current season we're in, 2025. We were 40 cents below the December futures contract now, so keep in mind this is a new crop basis that we're looking at. And we're actually at the 8th weakest basis that we've seen in the past 10 years. So not surprisingly, given the amount of corn that's expected to come. And we've seen that basis weaken through the summer as the weather news has basically been favorable all the way for this corn crop so far. I wanted to show in a longer term perspective how we compare to previous prices. And the way we do that is we compare it to production cost. And so we're looking at what's the level of profitability. And December corn today is trading around 394 after this report. It's fallen lower. It was down, I think, 12 or 14 cents when I looked earlier. And $3.94 a bushel for December corn is 20% below USDA's estimated cost of production. If you look on the chart, that's about the lowest or least profitable area that our prices have gotten in the post-ethanol area. So we had some much worse situations in the 80s and early 2000s. Uh, uh, but since ethanol has been a major help for corn prices in the market, this is about the worst profitability situation we've seen for corn prices. So I would say that even though today's report, that big crop estimate is very bearish and it's going to make it very difficult for prices to trade higher. At the same time, I think it's fair to say we're getting down to a point in the market where it's just hard to beat up the prices any more than they've already been. And I know, nobody can guarantee lows and that sort of thing, but there's a thing called elasticity of demand. And down at these low levels, it's going to be, I think at some point, very tough to keep pushing the prices lower. And so maybe that's the Pollyanna in me, but that's kind of been the history. When things look bleak, you get down to a certain point and the market just won't take much anymore. Here's the longer term chart of monthly corn prices for December. And as I mentioned, the demand side of the market's been fantastic. Exports are great. Ethanol production, great. But the anticipation of the supply just continues to keep those prices under the thumb. This shows that prices basically follow the 1-year average with a range of plus or minus 16%. And we're actually above the low end. We hit the low end of that range last fall, about the time I was talking at Farm Progress in Boone, Iowa. We hit the low end of that range, and we haven't been below that yet, but certainly today's report is going to be testing those lows pretty soon, I'm sure, if we're not already. Well, no, we're not yet, but it's tough. All right, well, that's probably the worst news of the day in terms of trying to help our producers any way we can. So let's go on and move to soybeans today. We saw a different response from USDA when it comes to the soybean estimate. So we'll go ahead and look at that US balance sheet. Thank you, Greg. And again, let's start in the left-hand column for the old crop season. And we're going to see some change in the crush and the export estimate on that side. And we see that USDA increased both the crush and the exports by 10 million bushels each. And that resulted in a 20 million bushel increase in the ending stocks, or excuse me, a 20 million bushel decrease in the ending stocks number. So we fell from 350 last month. Now we're down to 330, thanks to the slight increases in both the crush and the export demand. So similar to corn, we're starting the new crop season with a slightly lower ending stocks estimate than what we had a month ago. And in this case, USDA actually reduced the soybean production estimate. And if you notice, they made some pretty substantial changes to the acreage estimate. So the planting estimate for soybeans was 83.4 million bushels before today. USDA drops that down to 80.9. On the harvested acres, USDA took 2.4 million acres off that harvested estimate. So now we're down to 80.1. So even though we're looking for a good soybean crop this year, and USDA is estimating a record yield now, 53.6 bushels an acre, the total crop that size we're looking for is just 4.292 billion bushels, and that is going to actually fall short of the demand that USDA estimates. On the demand side of the market, the one change that I wanted you to notice, the export demand, they reduced by 40 million bushels in this report. Again, that kind of goes along with the lower crop estimate that they have. But obviously, the new crop season hasn't even started yet. So we have a lot to learn about what demand will actually be. These are just very early numbers. As we put it all together, go down to the bottom of the right column, we see that the new ending stocks estimate for the new crop season is 290 million bushels. That's down 20 from a month ago. They have the same average farm price of $10.10 a bushel, but there's a lot of uncertainty, obviously, to that yet ahead. We've got a whole season ahead of us that doesn't start until September 1. Let's go to the next slide. We'll take a look at some of the soybean yields for the states that USDA has brought up or estimated here today. And again, I have last year's comparisons from the top 8 producers on the left-hand column, and on the right-hand column are today's estimates from this August report. Illinois, they're expecting 65 bushels an acre compared to 64 a year ago. Iowa, they're looking for 63 compared to 60. And as we go down the line, we just see increased estimates expected all the way down. Indiana, Minnesota up to 53. That's a big jump from last year. Minnesota had some tough areas last year. Nebraska, they're looking for a similar 57.5. That's the only one, I think, and the rest are looking for higher. Ohio's looking for 57 instead of 50 last year. South Dakota, Missouri, both doing better than a year ago. So that's how USDA sees it today. But again, I want to mention that next month is when they get into the field and actually start looking at actual crops. So you have to take everything today with a bit of a grain of salt as we kind of get used to year after year. Let's look at the world estimates for soybeans, and it's a very slight change, actually a slight reduction, and it came largely from the reduced crop size here in the US. So instead of 126 million metric tons, we're down just below 125 million metric tons. And that drop was just enough to put us back below the record from last year. So we're no longer talking about record world ending stocks for soybeans at the moment, anyway. We're just below last year's ending stocks estimate. We look at the next chart, we got the soybean exports. And this year's soybean exports are doing better from a year ago. We're up 12%. As of the end of July, we've exported 1.76 billion bushels. But if you notice, we're still below the black line, which is the 4-year average. So we've had this ongoing trend of Brazil continuing to take market share from us every year. And of course, we have a lot of concerns about what's in the year ahead, tariff trade situation with China. And obviously, so far, as the year has progressed so far, China has not bought any new crop soybeans from us yet, but we're getting close to the time of the year when China typically buys soybeans from us. But this year they've tried to rely on Brazil so far as much as they can. USDA is estimating 1.87 billion bushels of exports in this, and that's the old crop season yet. So that's this season that's going to end at the end of the month. That's up 10% from last year. So there's a slight chance of ending up with a slightly higher export total than that right now, but we'll just have to see how it plays out. Here's an interesting gap that you normally do not see this time of year and normally do not see this wide. This is a comparison of the FOB soybean prices for the month of September. The brown price on top is from Brazil. The green price below is from the US Gulf. Right now, the price of beans for September from Brazil are $1.10 a bushel steeper, higher, more expensive than they are at the U.S. Gulf. So there's a lot of good reason why China should jump in again eventually and buy more soybeans from us this fall. But again, the trade talks are in there. Of course, President Trump just announced that he's going to delay the new tariffs. They're at a bit of a truce now for another 90 days. And the market took that as favorable news on Monday. We had a nice jump higher on that news, and hopefully it will allow a window for China not to be too upset to keep buying our soybeans this fall, because this is the time of the year they usually come and get them. And as you can see, the prices in Brazil are much more expensive right now. So you would think that they would want those soybeans, but there's a lot of politics going on right now, as you know. So anyway, that's the situation. It does look favorable. We should get sales from China, but it wouldn't be surprising to see less sales this year than we had a year ago, simply because of the political environment. The soybean processing value, very much like the ethanol margin, just going great guns. Even though soybean prices have fallen the last month, almost 2 months, the soybean processing value, that's the value of crushing beans into oil and meal value have stayed remarkably high. So there's still a lot of good demand for both meal and oil. Now, this year, oil's getting all the popularity of the demand, and meals struggled on the lower end. But overall, the overall crush value of both of those products staying very favorable, and that's why we continue to see strong crush totals reported. So far, season to date, the U.S. crush is up almost 5% from a year ago. So this continues to be another very strong demand factor for soybeans at these low prices. The soybean basis is slowly weakening. I would say it's not been weakening as aggressively as corn, though. And of course, we have comparing the ending stocks estimates, the soybeans are not looking for the big bulk harvest that we're seeing on corn side this year. So I think that's somewhat helping the basis hold more steady than corn is at the moment. Right now, the DTN's National Soybean Index is 58 cents below the November futures price. So that is the 7th weakest basis in 10 years. We have had much better years the past, going back to 2020, but we're back in a more surplus state of mind at the moment, with a lot of questions on China, I think, keeping potential buyers standoffish in the market. So basis pretty much reflecting the concerns that we see overall for being long grains. Here's the profitability chart for soybean prices, and similar to corn, we're down at levels that we haven't, basically the lowest levels that we've seen, or the least profitable levels we've seen for prices in 20 years. And soybeans trading near $10.20 earlier today after the report came out. Those are 16% below USDA's estimated cost of production. Now, just on Friday when I was putting the chart together, they were 19% below the cost of production. So they've had a little help the last 2 days, but we're still very much near the unprofitable end of this historical chart. Soybean prices themselves, here's November soybean prices on a monthly chart. And of course, we're not as cheap as they were back in 2019 and 20, but we've had a lot of inflation since then too. So we are just as unprofitable as we were back in those earlier days when we got down below $9 to in the low $8 during the trade war with China. So again, these are very tough areas for soybeans. Like corn, domestic demand is very good here. But the export sales to China remain a concern. So we continue to see soybean prices depressed, but hopefully finding some long-term support here, as they normally do when things get tough like this. Before we move on to wheat, I just wanted to point out some of the weather expectation for the months ahead. The upper right chart shows how much rain we've had in July, for the month of July. And obviously, this is a very unusual July. Usually it's a hot and dry situation we're looking at here. The entire Corn Belt just had very good amounts of rain, and any areas that had drought earlier seem to recover and mend from the drought situation. So obviously that's leading to these big crop expectations. The lower three charts on the map I wanted to show is the expectation for the months ahead. So the left one is August, the middle is September, and the right chart on the lower tier is October. Of course, we're almost halfway through August now, and we've had some rain in those northwestern Corn Belt areas. In September, we're looking for basically a drier, more normal forecast, and somewhat true also in October, with chances for some rain, perhaps in the Iowa, Illinois region, but light amounts. So overall, my concern is if we had a wet forecast for the fall, that could be problematic given the condition that a lot of fields are in right now. And we'll see if this forecast plays out or not. But right now, the expectation is for a mostly fall harvest type period of drier weather. So that's something that John Brannick will be watching closely for us, and DTN will have a lot to say about in the weeks ahead. Let's go ahead and jump into wheat now. We'll head on to that U.S. balance sheet. And here we just see very minor changes in wheat. The old crop number, 851 million bushels, stayed the same as what we saw in July. So no significant changes on the old crop estimates. If we go over to the new crop side, we see the acre estimates were kept the same, but the yield estimate was just tweaked slightly higher. Instead of 52.6, now we're at 52.7 bushels an acre on the yield. That ties the old record. Let's see if I can dig up what year that was. Whoops. Sorry. Here we go. 2016. So that's the old wheat record that we're tying today. The next arrow down, if you look at the production estimate this year, just slightly decreased, 1.927 billion bushels. So that's very close to what we had last month for the estimate. The one change on the demand side worth noting, the export estimate was increased for U.S. wheat. Instead of 850 million bushels, now we're looking at 875. That's actually favorable news. We are off to a little better start on our export pace so far in this new season. The new ending stocks estimate for wheat, 869 million bushels, is down from 890 last month. So there's a little improvement there in the tightening of supply, but the average farm price expectation dropped from 540 to 530. And I have to think some of that's probably related to what we just saw happen in the change in the corn estimates having an influence on wheat prices. So that's going to be tough there. Here's a breakdown of the winter wheat, or the wheat categories. The new estimate for winter wheat, 1.355 billion bushels, is just slightly up from a year ago. Not much change there. The hard red winter crop, 769, almost the same as a year ago. Similar with soft red wheat at 338. And white wheat, a little better crop this year at 236, which is surprising because it's been very hot and dry in the Northwest, Pacific Northwest, I should say. But as they'd probably say, well, you should have been here 2 years ago. It was pretty dry at that time too. Other spring wheat, 484.5 million bushels today. That was less than expected and comes in lower than the 504 of a year ago. But the durum wheat is up from a year ago, just slightly over 87 million bushels. So that's the wheat changes that we see from USDA. And by the way, the winter wheat production, I should mention, actually came from field data this month for the first time. So that one probably is a little more, should be a little more solid of a number. As we look at the world wheat estimates, ending stocks just dropped slightly, not much change at all. Instead of 261.5, we're down near 260 million metric tons. So not much change there. The two countries that did have slight changes, Argentina reduced their crop estimate from 20 to 19.7. The European Union actually increased its crop estimate from 137.25 to 138.25. And that, so you put those two together, it doesn't really explain why ending stocks went down a little bit, but there's a lot of countries that produce wheat that just aren't on this table. So we'll let USDA do the math on that one, but not much change overall is the main point. Looking at the next slide, the world wheat ending stocks, again, we're going to exclude China on this number. USDA estimated 4.97 billion bushels. As you can see on the chart, that's basically the same level we've seen for 5 years now. So in the international picture, the overall level of wheat supplies are remarkably steady, considering all the disruption we've seen in Ukraine from its being attacked by Russia and all that. But overall, international wheat supply is staying steady. As we go to the next chart, take a look at the basis for HRW wheat. This is interesting to me because as you look at the red line, which is this year's basis, we've seen a nice progression stronger through the summer. And right now, the HR wheat index from DTN is 50 cents below the September contract. We've seen nice firming of basis through the summer. And now we're up to where basis is the 6th weakest in 10 years. So basically right in the middle of the historic pack. And there's been some concern about Black Sea region wheat and just how those totals are going to come out. And we've seen some nice demand from Mexico. So it's nice to see a little bit more improvement on the demand side, especially for that HRW wheat this year. The next chart, Kansas City wheat prices, long term looks very similar to corn and soybeans. We've fallen back to historically low and very cheap levels. These are painfully low for producers, near their lowest levels in 5 years. They are showing signs of early support, but again, we don't have a strong bullish reason for the trade to change their mind and go long wheat. So they're stuck in a very hard situation right now. And the U.S., even though we've experienced some better demand and hopefully can pull out some better exports this year, we're still not doing very well at trimming the large surpluses that we have in domestic wheat. So that continues to be a tough market. Well, to sum it all up, I don't think it's any surprise I'm going to call the corn market bearish today. 16.74 billion bushel crop is much bigger than I expected USDA to say. It's bigger than all the analysts in the Dow Jones survey expected USDA to say. And we'll just have to see what the field data looks like in September and October and what the harvest reports look like from the combines as we get to those stages of harvest. But right now, the anticipation is for a very big number. I'll just throw it out there that it would not surprise me if this doesn't end up being the high water mark for the corn estimate this season. But we'll just have to see how it goes. We have had years in the past where, boy, when the weather's good, you can get a big crop, and this may be that type of year. But I'd like to see a little more proof before we write everything off. Soybeans roughly had a neutral report today. Those U.S. soybean ending stocks were trimmed to 290. And I think a bit of the surprise there was the less acres that USDA took out of play for the soybean market. And then lastly, U.S. And world numbers for wheat, basically neutral, very stable situation supply-wise. U.S. exports off to a good start is a bit of the good news there. So, Greg, this is a great time for any questions.
Yeah, Todd, and we have a couple of them in here, a couple related to corn. And one of them is just a topic that you were just touching on, and that's how realistic do you see this average corn yield estimate of 188? And the increase in acres, do you think that that's going to hold out? So I guess to
Yeah,
your comment about waiting and seeing, yeah.
yeah. Um, let's see. I'm not sure what more to add to it. To be honest, the August numbers are not the numbers to bet money on, is how I would put it. And I certainly would not short corn at these prices, even with this bearish report. And I know the expectation of a big supply will keep prices under pressure, but I think again, I think there's a decent chance that this could be the high water mark in the corn estimate from
Y-
USDA. But I would like to see a lot more evidence and interest from the field data that we're going to get in September. And I've talked to the guys all around eastern Nebraska and my part of the woods, and no doubt the corn crop looks very good, but I don't think most would. I think most would be a bit shocked by a 189 bushel acre. So I'm just not ready to throw in the towel that much yet.
What I would add to that is, this week we also had the DTN Digital Yield Tour going on, and our numbers look really big too. And folks can go to the dtnpf.com website and look through the stories there. We're breaking them down by states. And we talked to our data scientists about that and said, do you think things are going to be as good as what it can be? And I was reminded by John Muse, who was both our chief data scientist and also a farmer in North Dakota, and said, what you have to remember about most of these models is they're using satellite imagery, and the satellite sees the top of the crop. It can't see the bottom of the crop.
Right.
And so when you look at Iowa, how green in our maps Iowa is, huge yield predictions. What we don't know is that crop beginning to fire a little bit because of all the water. Are we losing nitrogen, or we got some root problems maybe going on. So to your point, Todd, I think the top of looking, a couple of miles up, it looks pretty good. The question will really come in as to when we get out there in the field and start doing real yield checks, what does that pan out to be? So I think you're spot on there.
And I would add maybe one more to that, Greg, and that is, yes, obviously there is a big correlation between the weather data and the yields that we end up with in the fall. But taking the weather data and specifically predicting a specific yield is very difficult. And
Yeah,
so
right.
we can all agree that the weather's been favorable overall, but I still think it's early to know what the actual yield number is.
Yep. Yep. I think that's a good point.
Yeah.
The other thing related to that is, do you see the administration pushing exports to China rather than issuing further farm support payments? What do you think that this administration is going to do to help support those corn prices if it continues to be a big crop?
Yeah. Of course, we had the comment from President Trump yesterday. He said, okay, let's quadruple uh, China, let's quadruple your purchases. And so I'm sure that is on the agenda to push China whatever they can do there. But we also know that China is very slow and resistant to
Mhm.
having their arm twisted. So I think it's going to be a long haul, quite frankly. And this is not just a 1 year solution or fix. I think that we can expect with China. It's going to endure not only this administration but administrations ahead. I think there's going to have to be some combination of financial support included as well. I don't think it's an either or thing. Um, but we still need support in these most extremely difficult times to help farmers get by.
Yeah. Question that I had looking at your FOB prices and thinking about how China typically reacts, that 90-day hiatus on the tariffs helps us there. It lets China come into the market if they
Yeah.
want to, when we get into harvest. And we know
Yes.
that China has always been a bargain hunter. So if beans are cheap, they will, probably come into the marketplace. What's your when do we get too far down the line that we think, well, they haven't come into the market yet. Maybe they're not coming into the market. What does that playing chicken scenario look
Yeah.
like?
I I I think folks start getting nervous about late October. Um, and uh, and at the same time that we'll be looking for that business from China, China's going to be looking at the prospects for Brazil's new planted crops, right?
Right, right.
So, if South America had some form of early trouble, that would certainly help our case with China. But if they get off to a good planting start, that could be a little tough on us.
The question just came in about the China tariff on Canadian canola. Any thoughts there on that and how that situation's going?
Um, uh, to be honest, so where I've come back from retiring 10 months ago, I have to say I'm not immersed enough, and I know there is a canola China story there, but I would defer that to Mitch. So if we try to get
Yep.
Mitch in the email,
Yeah,
uh,
that's
and
a good point. Yeah,
oh,
Mitch
okay,
Miller, our Canada analyst, could probably help out with that, Kent. And I can get him a question on that for sure. Um,
he would have a much more informed answer for that for you. So
yeah,
thank you for that.
yep, no problem. Well, looks like that's the questions that we have coming in. And again, I want to thank everybody for participating in this, and especially thanks to you, Todd, for coming back off the retirement
Yeah,
patio and
it's my
and helping
pleasure.
us out.
Yeah.
Yeah, helping us out here. It's great to hear your voice and great to have a chat. Um, I want to remind everybody that this will be recorded. So in a couple of days, it should be up on the DTN.com website. You should be able to download it, share it with your workmates, or review it for yourself if you have some things there you want to review. I want to remind everybody that this is the week of our DTN Digital Yield Tour, and we'll continue to have stories this year about what we're seeing out there on a state-by-state basis. And those stories will actually run through Saturday this year, because we've actually added a couple of states to I think we did 9 in the past. We've got 11 states that we're looking at now. So lots of good information in there. And good comments from farmers, because the stories are both a mix of what we see from our yield models and then our reporters out talking to farmers in those states and what they're seeing. So back to Todd's point earlier, I think there's some good insight there. You can find that on the DTNPF.com website. That's DTNPF, progressivefarmer.com. Our next webinar is next Tuesday, August the 19th, and it will be about the Digital Yield Tour. It's one of our DTN Ag Summit Series webinars. So we'll be talking both about the Yield Tour. We'll talk a little bit about the WASDE numbers today and what else has gone on since today. And we'll talk a little bit more about the methodology and how our digital yield tour works. So if you're interested in learning more about that, again, go to the DTN.com website and look for the post digital yield tour webinar and sign up for that. It's free, just like this one is. And as Todd said a while back, our next WASDE webinar is September the 12th. So encourage you to sign up for that one, just like you did for today's session. In between then and now, if you're out and about, we will have both Rhett Montgomery and John Baranek, our ag meteorologist who we referred to earlier, will be making presentations at both the Farm Progress Show in Decatur this year. That's next week. And then in September, the week of the 9th, so the leading up to that WASDE event on the 12th, we'll be at Husker Harvest Days. Be a great chance to come out and hear some updates both on weather and on markets from them, and get a chance to chat with them individually and have some table talk. We'll also be talking about some of the new products that DTN has coming on. These weather models and crop models, rather, that we've been using to spur the digital yield tour are going to be available in some products coming soon for farmers to be able to track what our models are saying and others. So you can learn more about that if you'll come by the DTN buildings at either one of those shows and come visit us. We'd love to see you. So again, thanks so much to everybody for participating. Thanks again to Todd. And I hope everybody has a safe week and be careful out there. Thank you from DTN, a Progressive Farmer.
Thanks all.